Hi guys, welcome to my channel KP Financial and Strategy Review. Myself Praveen Kumar. I'm a qualified chartered and management accountant. Before proceeding into today's topic, I request each and everyone to subscribe, like and share this channel so that it can reach to many relevant people. And in today's topic, we'll discuss about financial accounting and the basics of financial accounting, what is the meaning and definition of financial accounting, why it is important, and types of financial accounting, and what are the main important components. We'll discuss in detail, and I will try to keep it in a short summary, uh, and I will try to limit to 1 or 2 lines only for each topic so that it can be easily understood and digested by each and everyone, either from finance background or non-finance background. So we'll discuss about these 10 topics in nutshell as per this index. Now, coming to definition of financial accounting, it is called as a business language in which an entity explains its story of either success or failure in financial terms, either book value or financial value or net worth or market value or market capitalization value or current value, etc. Why it is called as business language? See, in this entire world, there are different countries and different states and different districts and different religions, and every one of us in our day-to-day lives, while we are expressing, when we want to communicate, when we want to convey our message to any other person, we'll use a language. That language is whatever is applicable or prevailing in that particular scenario or context. We will use that particular language. In a similar way, in a business, either from sole proprietor to corporate giant MNC companies, there is only one language through which an entity explains or shares its success story, whether the entity is successful or not, whether they achieved its goal or not. Everything will be expressed only in one common language, that is called as a financial language. That's why this accounting and finance is not just a department or a particular unit or not just a support function to the entity. It is a business language through which an entity explains its story. Like, I will explain you in layman language. In other words, in a human body, there are different organs and different parts, and every part of a human body, every organ of human body is important, and it has its own functions. But in order to function each organ effectively and efficiently, supply of blood flow is very important. If there is no proper supply of blood flow to each organ of a human body, then that particular human organ will not function in an effective way, and it will lead to malfunction. Thereafter, it leads to different kind of diseases, etc. In medical terms, in a similar manner, in a corporate entity, there will be different departments, and each department has its own function to work accordingly. But in order to ensure each department is working effectively and efficiently, finance and accounting is a particular department which will be acting as a fuel, which will be acting as a supply of fuel to each department as well as to the entity as a whole, and which will be acting as a supply of blood flow to the entity and as well as supplying of blood flow to each department. Without finance function, without accounting function, there is no history that a corporate has been succeeded in this entire world. This is a business language, and how it is happening? It is a process of recording and summarizing of business transactions. Accounting is nothing but, in layman's language, it's a process of recording of business transactions and thereafter summarizing of those business transactions. How it will record, how it will process means, there is a mechanism called as input, output, and input processing and output. Like an example, manufacturing companies, there will be input, purchase of raw materials. There will be processing system like conversion of this raw material into finished goods or semi-finished goods, and thereafter there will be output will be released in terms of finished goods. In a similar way, in accounting cycle, there is an input called as the business activities, whatever the transactions business is conducted, like purchase of goods, purchase of machinery, or selling of goods, selling of assets, etc. All those are called as the business transaction, that is called as inputs, and these inputs will be processed in terms of whether GV, GL, TB. These are processing mechanisms JV is nothing but general vouchers, JL means general ledger, TB means trial balance. These are processing systems, and the outputs will be in terms of financial statements or performance reports. These performance reports can be both financial and non-financial, and the financial statements will be generally 5 types of financial statements. Here I would like to explain you. Many of us are thinking financial statement means only 3, that is P&L, balance sheet and cash flow statement. No, always financial statements is minimum 5. Number 1 is profit and loss account, number 2 balance sheet, number 3 cash flow statement, number 4 other comprehensive income, and number 5 statement of changes in shareholders equity, and also notes to accounts as a whole. So these are the 5 statements. Why these are outputs? These outputs are nothing but used for the purpose of reviewing, analyzing and evaluating and taking a decision making and to take forward. So in nutshell, financial accounting is nothing but from where this money is coming and where this money is investing and how this money is utilizing, from where this money is coming and to where this money is going. This is called as a financial accounting in short. And there is a types of financial accounting called as accrual basis of accounting and cash basis of accounting. Accrual basis means here accounting will be based on as and when the transactions has happened, rather than related to money whether it is received or paid. So in accrual accounting we will be not focusing on when this money is received or when this money is paid. We'll be focusing on when this particular business transaction or event has been happened or occurred. That is only the focus in accrual accounting, and this is supported by GAAP and IFRS. GAAP is nothing but generally accepted accounting principles, either US GAAP or any other GAAP. IFRS is nothing but international financial reporting standards. So this accrual basis of accounting is supported by US GAAP and IFRS. And next is cash basis of accounting. Here in cash basis of accounting, the recording will be based on when the money is received or when the money is paid, whether it might be relating to this particular transaction or not, or might be relating to this particular period or not. We are nowhere related here in cash basis of accounting. Here in cash basis of accounting only focus is when the money is received, when the money is paid. In vice versa, in accrual accounting, we are not focusing on when money is received, when money is paid. We are focusing on when the particular transaction, when the particular event has been happened or occurred. That is the main principle for accrual accounting. Next is cost accounting and management accounting. We'll discuss about this cost accounting and management accounting in detail in next coming series. So hope you people enjoyed the main basic definition of financial accounting. Keep watching. I will be posting a series of videos very shortly. Thank you very much.